kick off our recording and formally welcome you to the kickoff to our Intro to Angel Investing mini series. I'm going to give a little bit of background about myself and She's Independent, which is the organization that I started that is putting this on. But this is really meant to be a space for you to learn, for you to be able to step in, whether it's as an angel, as a new angel, as an existing angel, step up your portfolio. It's all about making you, more knowledgeable and feeling more confident. And by the way, I should quickly say that as it pertains to angel investing, and actually, sorry, we're gonna start this again because a few people just joined. So I'm just gonna quickly say this is going to be the kickoff of our Intro to Angel Investing mini series. Welcome. And this session is really focused on, concepts, everything angel, but a little bit more foundational. Then we're going to later get into in some follow-up sessions a little bit more about investing, deploying, more deeper concepts, I should say. So to kick this off, I'm Natalie Levy. Great to meet you if we haven't met. And basically everything I do today, and how I show up is all about education and access to, how can you do this thing? And angel investing, we'll talk about it, we'll break it down, but it's an asset class with a lot of influence, with, some really interesting learnings, and just an incredible place, I think, for, women and folks that have been underrepresented, in this space to be able to step in and have real influence. My background is Wall Street, derivatives trading, private equity. I've been angel investing for well over a decade, and I've had some really tremendous returns. I'm not going to lead with returns in this. It is a risky thing to do, but it's about, sharing education. It's about sharing access. And if it feels like something, that you might want to step into, then I'm here to basically say, great, how can we support you, whether it's with us or elsewhere? How do we uncover kind of what this is? If you know me, I know a few of you, already on this call. I do like to start a little bit with kind of my story and, why this is such an impactful focus and area for me to play in. And I think that because we really do focus on, we call it women first angel investing, what we do at She's Independent. Let's talk about that, right? Why do I care about this? Why do we care about that She's Independent? I can't tell you how many of those Me Too moments and those overlooked, opportunities in the professional realm that I experienced being a woman and not looking like the executive team. I have you're probably like, what is this middle picture here? Why is she in short shorts, holding a bunch of hundreds? The point is, we have been, conditioned to feel like, wow, I don't have this understanding. This isn't something comfortable for me. Deal makers can look like anyone, right? You can have money, you can allocate capital. You don't have to look like the generations that did it before you, right? So I want you to recognize, like, you don't have to, look a certain way. You don't have to be of a certain family to do this. It's really about, I think, that access and understanding how to step into it. I have a picture with my mom. She never fully understood, her financial, how to even handle things after divorce pertaining to things like taxes, right? Recognizing women across generations haven't been given this opportunity oftentimes to think about money and wealth as something that is so influential. It's why I do what I do today. And to create these rooms, whether it's virtual, whether it's in person, it's not just about talking about glass ceilings, but it's saying, let's break the hell through that, glass ceiling. And let's talk about not just executive teams. Let's talk about, who is stepping into the investment roles. So I'll call out somebody on the call, Uma. We both, went through a boardroom training. And when you're on the board, as an example, you have influence to say, well, what is the hiring and what is the executive leadership and what is this business doing? It's not just about being an executive in a company. It's who's in the boardroom, who are the owners, who are the investors in that company. And that is real influence, right? So what we're going to talk about today in this first kickoff session for our mini series is, what is angel investing? Why might you want to step into, and how should you think about angel investing, along with some of those foundational concepts? Again, you have questions, feel free to raise your hands. What's equity? How do I think about a capitalization or the ownership of a business? Where do I fit in? How do I think about valuations? How do I get started? And by no means are we going to be able to cover everything. I like to say that in these sessions, if you're newer to this content, you are absolutely going to have questions. You are absolutely going to say, oh, that's interesting, but I didn't quite get it. First, we're recording it. Second, we have plenty of materials, resources, and a group that, regularly is stepping into deal making. And so I think by just saying, I want to do this and I want to show up, you can start to learn this, pretty deeply, but we're just going to, cover some of the concepts in this, first hour session together. And let's quickly touch on the inequity that exists, because if you're asking yourself, well, what is my why? I know that I should care about this stuff, but what does it mean, right? What is the state of the world today? We all know that the wage gap, right? Women getting paid way less than men still exists today. 83 cents on the dollar that women earn. And that's overall. So if you're talking about women of color, bigger gaps. But look at these gaps that I have up on the screen for you. Equity ownership, 43 cents. So women are only owning 43 cents of every dollar owned by a male counterpart. The VC funding gap, which it still is under 2%, which doesn't make any sense, right? Less than 2% of the VC funding goes to women-owned businesses. Ridiculous. And then that board diversity stat, where again, if you don't have women, you don't have diversity, you don't have, representation in these rooms of influence, what's going to change? And so we're going to talk about investing, and just at a high level, why did you show up today? By the way, feel free if you want to, participate in the chat and you want to kind of drop anything. Hey, this is what I'm excited about. This is why I'm here. I welcome it. No pressure, if you want to keep that to yourself. And here, let me move my chat screen so you'll be private. But there's so many things I could point to when people say, well, why, what gets you excited about angel investing? And I think a big part of it, especially when you're earlier on the journey, is that knowledge and the tools. You can reinvent your mindset. I mean, that's massive, in any category, but just recognizing I'm not going to step into a board role or an employee role if I don't feel good about this company, right? Maybe career pathing and having, a little bit more say or a little bit more strategy around the influence for where I am going next. Because if you're check rating and you're in these rooms, right, you may all of a sudden realize, wow, you know what? I actually really want to work with that business. Or, you know what? I thought the business that I was with was interesting, but you know what? I actually want to do the growth thing. Who knows? I mean, there's so much that you're going to uncover. And again, these networks, right, they're powerful and they're going to open doors. Maybe it's a new board seat for you. So there's a lot here. I think the influence thing, though, I really don't want to gloss over that, which is, as an investor, we can say, wait, we looked at, the ownership structure, and that very senior woman, she doesn't have much equity. We can change that, right? Like we can step in and actually have these tough conversations, and we do. It's not just that we do that as angels. So, just to define this, because a lot of people say, well, hold on a second, what does this actually mean? What is angel investing? We're talking about private markets. We're talking about deals or opportunities or businesses that are not, accessible, where you can't buy stock on a tradable exchange like the New York Stock Exchange or NASDAQ. This is basically, maybe you hear about it because your uncle told you, hopefully not. Maybe you heard about it through an angel group. Maybe, you were looking at some crowdfunding platform, but it's finding businesses that are looking for private funding sources. And private funding sources could look like a number of things, but angel investors are one type of private funding source. Thank you so much for weighing in the chat, Selma. So let me give you an example. Company X says, okay, well, we're bootstrapped, we self-funded, and we've been chugging along and plugging away, but we really need some capital. So they might say, okay, I'm going to find, private investments, and I'm going to, talk to different investors I know. Maybe I can't tap friends and family, which is, typically around that traditionally, back in the day people were doing, but maybe I don't have that network. So I'm going to look for angel investment, or I'm going to look for potentially, a fund, meaning maybe there's a venture capitalist or some fund out there that can put some money into me, because traditional financing, for whatever reason, it doesn't make sense for my business. So angel investing is thinking early stage private investing. And to be an angel, to allocate in the US as a private investor, you need to meet what's called the definition of an accredited investor. The SEC, the Securities and Exchange Commission, and we can share all this with you later, but they basically require that you have a certain net worth or income or knowledge, because these are inherently risky. Inherently, you're going to have, potentially no money out of it, but your money's going to be locked up, tied up. If I buy a stock, if I buy Apple stock, I can decide I want to sell the Apple stock. And maybe it changed a little bit in value because of what the market did, but I can sell my position and get the money back. With angel investing, if I deploy that capital, that's locked up. I may be able to get it back. Maybe, there's some exit, but at the same time, there's no guarantee, and it may be a very long holding period, 5 years, 10 years, maybe 3 years. I have some exit, but on the whole, this is an inherently very risky thing. And that's why there are these definitions for you have to be accredited to do it. And by the way, I didn't actually state what accredited meant. So you don't have to pass a test. Well, there is a knowledge test, but if you're doing it on the basis of net worth or income, it's you actually checking a box saying, I, self-attest to meeting this definition. And so in the US, the Securities and Exchange Commission, they're basically saying you either need $1 million of net worth, excluding your primary residence, or you need to make $200,000 of income over the last 2 years, with the expectation of making, that in the future. That's if you're single. There's a separate definition if you're a couple. Again, just shedding a little bit of light on what this means. All right, we got a bunch of concepts to get into. So let's talk about equity. So equity, there's many ways we can kind of think about this. I think about it first and foremost as I'm getting ownership. I have a say. If the company exits, if there's some liquidity event, passively, because you don't actually know, I can participate in that. The fourth point I have on the slide is one that I like to include, because if you're not yet accredited, you may still be stepping into, angel, I should say, ownership through, equity plans at an employer, or, stepping into a board seat that has equity, and recognizing that it's very often, or almost always, cheaper for that company to give away. It's good for you to understand around negotiating it. When we think about allocating as an angel, we think about, well, how do I step into that ownership? How do I step into that potentially equity position? There are many different versions of, or ways to step in as an angel. And this investment vehicle slide, I just want to share with you at a high level, there are many different mechanisms. The second box, which I have in red there highlighted for you, is depicting what we often are seeing when we invest as an angel group. We are most often seeing safes or convertible notes. I'm not going to go into everything about what that means. We could talk about it. We could talk about negotiating them, all that. That's for another conversation. But what I want to point out is these are instruments that the company is basically saying, okay, these are the terms of the raise. We want your money, but you have to sign something. There are, documents, there's agreements, there's, and it basically spells out, this is what your position will look like. The first box on the slide, equity, options, shares, RSUs, that is oftentimes what you're going to see if you join an employer, or maybe you step into, a board seat, and that's a package, an options package or an equity package that you'll often, receive. By the way, this is never 100%, right? You might get warrants as an employee. Maybe as an investor, we're actually investing in shares. That happens, absolutely. But I'm just giving you a gist of, some of the different instruments out there, and just to give you, again, some of the terminology. Because if you don't know the basics, and if you haven't started to learn the terminology, what happens when I try to watch football. And I went to Michigan, so don't tell, my colleagues there, or my friends from there, but I know a little bit. But because I don't know it deeply, I'm going to shut down, and I'm not going to go deep into learning, action mode. I'm not going to deeply engage, because frankly, I don't really care. But if you don't know enough, and I don't know the backstories of the players, it's not that interesting. But if you do some legwork and you're like, oh, in this funding environment, those are the terms you got on that note. And oh my gosh, this is a women's healthcare business and there's tax credit on it. You're going to start to perk up. And you're going to say, yeah, this is a really interesting risk reward. And this is something that's really impactful to the world. And I guess I'm giving a little shout out to LAFA there because women's health is something I know our group loves to invest in. And it's just so impactful. It's been really underfunded, right? Women's healthcare over the years. So let's move on. The investment vehicle slide is a little scary, I know, but thank you for bearing with. And let's talk a little bit more about understanding, well, what is equity? What is ownership? I never want you thinking in terms of, I have 20,000 shares and I'm so excited, or I have 20,000 shares and this is what it means. Because I don't care what the share count is. What is your percentage ownership, right? So you join an employer and they say, great, we're so excited to have you. We're giving you, 20,000 shares. You should feel really good about that. What is 20,000 shares? What was your last valuation, right? What percentage of this is this? Because if it's 0.001% and the company's worth $10 million versus if it's 0.1% and the company's worth $100 million, right? So recognizing what is that percentage ownership and, how do you think about valuations? But let's talk about the other terms on this slide. So what's a cliff? If you join a company as an employer, if you join a company as an advisor, they're going to embed what's called a cliff, meaning they're going to say, all right, welcome. We're so excited to have you. You have a 1-year cliff and it's a 4-year vesting schedule. And that means if you leave within a year or before a year is up, you get nothing, 0. Typically, it is a 1-year cliff and 4-year vest. And the 4-year vesting schedule means you have to be there 4 years to earn or to own whatever they were offering you. So if they said, we're giving you the 20,000 shares, it's a 1-year cliff, 4-year vest, and you leave after 9 months, nothing. If you leave after 2 years, it's typically what they call a straight line vest. So maybe you have 10,000 of the 20,000 shares. Recognizing, again, what are these terms? We're not going to go into it, super deeply. We're introducing some of this. And are those negotiable, by the way? We talk about it. Yes, oftentimes they are, assuming you're not, entry level in a employee in a company that's already, to the moon with, hundreds and hundreds or billions of, valuation. You can typically negotiate this stuff. What is the cap table? When I say the capitalization of the business, right? That means who are the investors? Who are the funders? What's the money behind it? So when I'm looking to invest in a business, I'm looking at what's called the cap table. And I say, oh, you have 30 investors and I see your employee equity, your employee team, or I should say your executive team has this percent. These numbers look a little bit off. And what do I mean by that? I'll give you an actual example. A company that we're in diligence with right now, our investment group, we looked at it and we said, well, we know that the CEO wasn't the founder, but she's working really, really hard and she doesn't have a very big position in the company. What's going on? Flags, right? Understanding how to look at this stuff and questions to ask. I'll throw out another example. Uma, who's on some boards, right? I'm waving at Uma. What happens when she steps into what could be an equity ownership plan, for a board role? What if they give her a 2-year package? What happens after the 2-year package? You got to get more equity, right? And so just recognizing what's on the table, what have you scoped out for maybe a board, for your employees? It's all really important stuff. But just again, understanding capitalization of the business. This is something you can very much see transparently as an investor or as a future investor. It's not something that they're always going to show the employees. They're typically not showing employees. But if you're a very senior employee or if you are an investor and you know how to ask the questions, you may be able to get a glimpse of this. So you have the transparency as an investor. So again, how do we think about stepping as an investor at, what can I ask for? What should I look for? And I'm mainly talking about this as the check writer, as somebody who's going to step in and write a check as an angel. But again, you can be thinking about this also as an employee that's stepping into an equity package. But when you're trying to get that context for, what's happening this round, what's happening in the raise, what stage of financing are they? So let's define that. If a company is bootstrapped, that means they've never raised capital. So maybe I have a widget and I started selling it, or I have a services company, and I never had to raise capital because it was maybe not too capital intensive up front. And maybe I was profitable because I wasn't taking a salary and I just started selling the thing. So if you're bootstrapped, you're not taking outside capital. When you start taking capital, it typically is going to follow a certain cadence, or I'd say terminology, based on what that raise schedule looks like. And so the first time some company raises is typically called a seed or a pre-seed. Then it might be a seed plus. It might be a pre-series A or a series A. So you can see there's different language terminology, names that I can use in terms of prefix or suffix. I mean, basically it's going series A, series B, series C, and then maybe the company goes public at some point. And oftentimes the companies that are going to go public, meaning the ones that get, really big and a lot of funding, they're typically getting through series E, really late stage rounds. Not that they always have to. And by the way, founders will often say, oh, we only need a couple $1 million and we're going to be a billionaire, or, we're going to be a unicorn. That doesn't really happen. So recognizing, what kind of financing are they doing? What are they planning? What type of financing? Some startups are getting that traditional or maybe not traditional debt financing, or, venture financing alongside angel and venture and, the funding that we're talking about, right, from private investors. There's all different types of players out there. So recognizing I'm going to join a company, or I'm thinking about joining a company, or I'm thinking about investing in a company. Who are the other investors? Are they strategic? Are they smart? Do they know the market? Do they have capital behind? I'll give you another example from a company we're in diligence with. And when I say in diligence with, it means we're in the kind of late stages of determining, do we want to invest? So one of the companies has a ton of investors, but a lot of them are angels. Is that okay? I have thoughts, questions. We want to make sure there's some strategic capital at play. Why? Anybody know what the market's doing right now? I'm not following it on my phone like I used to when I, traded professionally, but I can tell you the funding market, the private funding market, remains tougher. The liquidity, the funds, they're just not there as much as they were a couple of years ago. And so if you have just angels there, angels are saying, all right, well, I guess I'll write this check for 25 or 50,000 or 10,000 or 5,000. But at the end of the day, if the company needs millions of dollars, you don't want to just have angel investors. You also want to have what's called, strategic or institutional, meaning access to, venture capital funds, folks that can write bigger checks, because just getting those, onesie twosie checks from angels is not necessarily going to fill your round of $5 million, or maybe your next round of $20 million. But having strategics or folks that, really have capital, or maybe want to acquire you, becomes a lot more interesting. So understanding, who's participating. And so I'd much rather write a check where, first, I'm not going to be the only money in, but who are the other people playing? And can they be influential? Can they, do they have dry powder, meaning more money that they can put into this thing? What are the goals of that raise, right? Recognizing, right? These are all really key questions to think about and ask when you're thinking about allocating a check or stepping as an angel. You're hiring people, you're bringing something to market, all really good things. And by the way, there's a lot that you can ask and a lot that you can dig into, even if the company's pre-revenue. We're not going to get into all this kind of diligence and, final checks that we do before we write a check in today's session, but I just want to introduce some of this. And let's talk quickly about valuations. Valuations are an interesting one because it's not something where I can say, 1 + 2 = 3, right? It's really story driven. It's really, what's the market doing? It's what is the investor supply demand? And yes, if we're talking public markets and we're talking about, a company that's more established, absolutely there are some kind of fundamental, or I should say industry standards that I'll make this up, in the retail industry, maybe it's going to be driven on a, 3 times EBITDA, earnings before interest, taxes, depreciation, amortization. in that specific vertical if it's a certain size of business. That's very different. When you're talking angel and private investments, you're not typically seeing, okay, here's, the profitability of the business. You're typically looking at things like growth, maybe what is the burn? How much is the business losing? Maybe the ultimate market opportunity. Let me give you an example. If a company ultimately may have a, billion-dollar exit, it's very different than a company that may only have a $50 million exit. And how do you differentiate between those? Let's talk about that. We talked about women's health a little bit ago. If it's a medical device and you have a target or, you have somebody in mind that's going to buy your business at some point, and the size of the vertical, and you've seen, comps, meaning, other companies that have had acquisitions in a similar type of realm, you may only be targeting a $50 million exit, and that's okay. But that's going to be a very different story than a company that says, oh yeah, our addressable market and our exit, we're going to be, a couple $1 billion. Not that you necessarily, fully trust this stuff. You can't have full confidence in it, but understanding, right, how big is that market? What is the story? And then there's manic investor participation, which I have in here under, the investor interest section. I don't know if anybody saw that GameStop movie. I'm forgetting now what it's called on Netflix. It's fun if you haven't seen it. But basically, if people just want to buy something, even if the underlying fundamentals aren't there and a bunch of retail folks, meaning, non-professional traders want to buy something, they're going to move the market. It's going to change the value. Thank you for weighing in, Selma. It was really fun. But, what do I mean by that? If there's a private company and the founder is really good at fundraising, or they're based in San Francisco and they're only talking to West Coast VCs, it's probably going to come in at a higher valuation than a company here in the Rocky Mountain area, right? That doesn't have VC, West Coast VC money or East Coast VC money at play. Really, Natalie? The valuation changes based on where you raise? Yeah, crazy. But part of it is network. Part of it is, if everyone's jumping in, that's ultimately going to impact what is that valuation where it's going to trade. And by the way, founders ask me all the time, they're like, well, how should I price this? And, what should I expect? And what should I be doing? And it's, well, you're going to have to see what the investors think. And sure, you're going to be selling them something, an idea, a story. But at the end of the day, it's not the founder saying, and these are going to be the terms of the raise. It's working with the investor or the lead, we call it, to negotiate what are the terms of the raise and where is the valuation going to trade for that round. So it's not, it's, I want, but what can we make happen, right? So that's a nuance. And when you want to think about, or you start thinking about ownership, I did mention to you that early stage is risky. And I want to make it very clear, right? I've had some ridiculous returns. One of my checks for, $10,000 ended up being worth $700,000. 7 years later, that's not typical. When you think about ownership and, what is my potential exit on this, I do want to touch on the concept of what stage are you investing? I'll give you an example before I talk about this slide. I talked to a woman who had a really good track record. She had a fund, meaning she professionally manages money. And she was saying, oh yeah, I invested in all these unicorns. But she didn't invest really early. She invested when they were almost unicorns. And it's very different to invest in an early stage business that becomes a unicorn versus a business that you can invest and they're already worth $900 million. So getting to that $1 billion mark is very different than, you invest and they're worth 15 million. So what am I saying by this? Your returns and your track record, it's sure you can tell any story you want, but let's talk about this stuff. If you invest $10,000 at a 6 million post-money valuation, my first example on this slide, and what is a post-money valuation, you're asking? We'll get into that later, but you're going to get 0.16% of that business, also called 16 basis points. You may say 0.16% doesn't sound great. Actually, your 10,000 is going to $833,000, an 83 return multiple on a $500 million exit. Wow. Big assumption there. The big assumption is you invested and there was no additional raise that diluted you or lowered your position, and that at exit, you still had 0.16%. Typically, they're going to see a lot more, capital injections to get a company to that kind of exit. But the point is 0.16%, right? It's getting you an 83x, $833,000 on that 10,000. If you invested that same $10,000 on a 30 million post, meaning a bigger valuation, right? 30 million compared to the 6 million, you're still going to have a great exit at 17 times, but you're walking away with, 167,000, not the 833. So what am I trying to say? Investing in angel, investing in a 6 million, post-money valuation, it's damn risky, but it could also have tremendous upside, right? So back to my earlier example, if you're investing in something that is a much bigger valuation, you're going to have a much smaller position for, what you're investing. It's going to be less risky, right? But you can also ultimately determine and decide, how do you want to invest, right? What is your risk tolerance? Do you like early stage? Maybe you don't want to play that risky. That's okay. Maybe you write smaller checks when they're early stage. And if you see them, executing, maybe you re-up, maybe you write bigger checks afterwards. Because guess what? If you say no to that company that wanted your check at 6 million, they might not want your check at 30 million because you're a small investor probably. So all things to think about. And then moving on from here, in terms of the ownership percentage you can expect if you're negotiating, and we're just going to gloss over this. If a company says, we love you, you're so talented, we want you on our executive team, we want to bring you in as a senior manager, make sure that you're asking the questions and you're vetting and understanding well, what should they be giving you? And I guarantee you, almost always, if you're not asking for more, and I'm not saying to just be egregious, I'm not saying, ask for the world, but knowing what you're worth in terms of the equity piece, if you don't ask for it, you're not going to get it. And recognizing a company that's already raised $30 million is very different than a company that's raising their first $2 million. Recognizing a company that's, already closed $1 million of sales is very different than a company that's pre-revenue or very early, first dollar sold. A company that's already a unicorn, again, just very different. So what is your role? What is that size of business? What can you negotiate on? And again, we're not going to go into this in detail, but just something to think about. And again, you can start stepping in as an angel, or I should say as an owner, even before you're ready to write a check. You don't have to be accredited to step into employment or employee equity, board equity, advisory equity. By the way, even though a typical angel check might be 25,000 or 50,000, with an angel group, or if you're, looking at crowdfunding or, different ways to access in this more democratized world of private funding where more people have access, maybe you can play for $2,500 or $5,000, right? So it's thinking through, what is your situation and, how might you want to participate? And a few tips and thoughts, to think about. You can, of course, navigate into and path, create a path to angel before you're accredited or ready. I do want to say that if you are waiting on the sidelines, waiting to be 100% ready, it's never going to happen. 100% does not exist. My favorite question that we get all the time is, well, how do I change my mindset? You do the thing, right? Before we started the recording, I was showing off my crutches. I'm wearing a cast right now. I'm dealing with a ski injury and it's been rough, but I put on a little bit of makeup. I put on these shark tooth earrings. You change your mood based on, how you show up. You do the thing, your mindset follows. Right? So start investing and all of a sudden you're an investor, because I can't tell you how much that's going to change the game. If you say, well, I joined the angel group, I wrote my first check, I co-led that, screening call or diligence, even if I'm not yet ready to write checks. the way we are seeing a transformational mindset shift out of that, I mean, it's incredible. You're going to be in the rooms. You're going to be in the rooms talking to founders, talking to investors. This is access you don't get anywhere else, right? A few other recommendations, learning alongside others is huge. I loved Uma's shout out before, I guess, maybe we kicked off the recording, but knowing that you're doing it with others that have an actual track record that have done this before. I am not here trying to make $1 million off of you. I've already done that, myself. I am here saying, I'm here to change the game. I want you to step in as an investors, and I'm not here to take advantage of or, try to get you to write the biggest check possible. I'm here to say, are you interested? I'm excited to support you and provide this framework and this mentorship and this group so that you can step in and you can do the thing, because it's way bigger that 100 plus of us are angel investing versus just me, right? And a little bit about our investment group. We're called She's Independent Investments. All are welcome. We have men, we have allies, we have sometimes households. It'll be a mom, daughter, sisters, but oftentimes it's an individual that joins, predominantly women. We have women in their 20s, we have women in their 60s. I mean, truly, it's, a very inclusive environment where we're really excited about, who's a part of it. And we're really mission driven. We truly care about this stuff. What I don't actually have up on this slide, and I really should, is that we're quality. And that matters tremendously if you're talking about angel investing, because the quality at which you are running these activities, looking for deals, screening them, making investment decisions. If you're writing these checks, you want to feel good about it, right? And you're never going to have 100% confidence, and you shouldn't, that this is going to work. But to be able to do it alongside others that are diligently, investigating and have done the thing and care about risk reward, that's really, really important. Not just for the information transfer and for access, but for you to be able to do high caliber deal making activities from the get-go. We have, various opportunities and ways to step in. We actually still have some sponsorships available for young, diverse women in the Colorado area. So if you fall under any of those categories, actually age doesn't matter. You can also ping me and we can get you set up with our sponsored observer membership. But we have a lot of opportunity, right? It's not just stepping into these rooms, but it's actually the company saying, you know what? Yes, I want a woman on the board. Yes, we need more women, stepping into advisory roles. We can also facilitate and help with that, introduction as well. And how do we operate? We are a group of, I'd say, diligent, intelligent, proactive individuals where you can be more engaged, you can be more passive, but we're constantly proactively running these deal sourcing activities, which is huge. Because again, you don't want to just take that, startup that your uncle heard about at the auto shop. You really want to invest in things, that are quality and that you have uncovered through sleuthing. And it's not necessarily the deals that approach you, but it's the ones that you find through a well-connected and proactive, approach and network. We're constantly looking at, what's the alignment? Where is the interest? We're, running pitch events. We actually have our upcoming Q2 pitch event happening later this month, or sorry, I had that totally wrong. It's going to be in June, our Q2 pitch event. But basically, we come together and, this collective insight, we say, what do we want to invest in? And we jump on calls and we, do diligence. And then we say, okay, well, what are other investors saying? And, back channeling to make sure that it's not just the information the company wants us to look for, or, see, but we take a really strategic approach, I think, to how we're allocating at the end of the day and deciding, where we're going to put our money. And when you look at our portfolio, I have it up on the screen, it's well over half women owned. We have, and we can share, deeper stats if you'd like, but we're really excited to not just invest in women, but also diverse founders, but we don't require it. And what do I mean by that? We sometimes invest in incredible founders that don't have diversity or representation or, women on the executive team or on the board. And we can be influential in changing that. And believe me, we show up so authentically ourselves. These founders, they know who we are. And when they're appreciative of what we do, this isn't them saying, oh, we just want your money and we're going to pretend we care about, the influence of women. They really, are supportive when they take our money. So this is an example of, some of the companies, or I should say the companies that we've invested in as a group. We've additionally written checks into companies directly, meaning we maybe didn't do it as a group, but maybe I invested or another individual or a couple individuals invested. So this is the portfolio of, we've allocated, a lot of it's been around women's health, which is, again, that sector, that vertical that we've seen just massive, amount has been overlooked, underfunded. A company right now that we're, evaluating in women's health. I don't know how many of our members immediately said, I want this product. I want to use this product. That's really exciting, right? Some of the companies we've invested in have been sustainability and clean tech. It doesn't need to have an ESG angle, but I will say, because we're on we're on kind of this mission for, we want to allocate really good capital and deployments, but we also care about, this world we live in. We're oftentimes not necessarily getting excited about, alcohol, or companies that, don't have something that feels good, right? Maybe you look at the company, you say, you know what, that culture, it really feels off. Great. We don't have to invest in them. So really, peeling back the layers to make sure that this stuff is aligned and looks like a good risk reward. Reminder, right? This stuff is risky. You're not necessarily going to get that 20x return that I've gotten on average, across my investments. That is not normal. But what you can absolutely expect, 100% expect, is learning, access, influence. But it is negative selection, meaning if you're going to say, oh, I just want to start allocating as an angel, and you're not doing it in a way, in a group or with people that have done it, that have access to good deal flow, it's going to be pretty crappy. I will say that. So, feel free, and it doesn't have to be our network. Maybe it's through some alumni network. Maybe it's you just digging around and saying, well, I want to see what's out there in terms of crowdfunding. Crowdfunding is great, but, right, you're not going to be in the rooms asking the deeper questions. You're not going to get that time of day. And it's going to be the information they want to share with you, not the information that you proactively would get if you were stepping in as a bigger angel, as a part of a group. So if you're interested in this, again, this is part 1 of the series. We're going to, spend more time digging into all the things, but some things to think about. What is your path? Maybe you are accredited, maybe you're not. Maybe you're not. Maybe you want to set some financial goals, all things you can think about. And I'm not, a wealth advisor, so I would never say, this is what you should do. But we talk about check writing. We talk about, how big should the check be, and, what's your net worth? And we're happy to talk about money, because if you don't talk about it, it's not going to be comfortable and you're not going to be able to learn. And I'll tell you something, a lot of times we are seeing these women that join our group, they've never had that kind of check writing mindset. And so it can feel really, really big, and that's okay. I have women that have millions and millions of dollars, and it's so hard for them to write a check that's $20,000. Real example. And that's okay, right? I am not here to say, be uncomfortable, but I'm here to say, well, why are you uncomfortable? And when you think about your portfolio allocation strategy, maybe this is something that you actually want to do. So it's really about, I think, educating, enabling, supporting, and saying, and what's the right path for you? And I have this screen up, which I know is kind of a little bit repetitive from what we talked about earlier of why you might want to invest. But truly, I think the reinvention of your mindset and how you show up, even at your day job, even at your new job, because you're going to get a new job because of this. I mean, you name it. But the reinvention of the mindset, I think, is huge. And we're not even talking about the portfolio right now, which is also really exciting. But there's so many reasons why, we know that folks love stepping into this. And in terms of what's next up for this mini series, we're going to talk about angel investing in terms of case studies and a bit of diligence and what we do and what we look for when we allocate. So that should be a really fun one. I know the topic I just touched on a minute ago, which is check writing, which can be really uncomfortable, and talking about money. That's going to be the final session. I know that's one that a lot of us as women just, guess what? We didn't grow up talking about money, and that's okay. But how should you think about building a portfolio? These are risky. And so should you allocate just 2 or 3? Nope. You're going to want to think portfolio strategy, right? You're going to want to think about actually constructing something with, more reach. And you're going to say, these deals may not work out, but if I have a good, 15 deals, guess what? The expected value on that is going to be a lot more interesting than the expected value on 3 deals. So that's what I had prepared. I know there were a few comments in the chat, not too many questions, but we're hosting an office hours next week, and we do these monthly. So feel free if you want to check it out, join us. It's really to talk about anything angel investing. Maybe you want to talk about or ask about the angel group, or writing your first check. Anyone's welcome. Those are great discussions. And we also have some of our members from our investment group that join those as well. So welcome you. As a reminder, our investment group, we do a ton around education, access, and mentorship. We actually have weekly meetings for talking about deals and deal making. So if you really want to learn, I think there's no better place than with us. But of course, there are many mechanisms out there and communities for you to check out. And we do have a little angel, intro to angel worksheet if you wanted to scan that. But that's what I had prepared. Any questions, you can, of course, email membership@she'sindependent.com or myself, Natalie@she'sindependent.com, and I will stop the screen share. And yeah, if you have any questions, feel free to share them, thoughts, feedback, all the things, where you are in your journey. Oh, the QR code isn't working. Okay, let me see what's going on. Which QR code, Selma? And I can put it back up.
You know what? Neither of them worked for me. I'm hoping it's just me.
That's so interesting because I just checked it.
Let me check.
Oh, that didn't work. Okay. You know what? You're absolutely right. I checked the QR codes on the other presentation. All right. So what I'm going to do is I will quickly drop the URLs for both of those. Luma, which is where we have our various events listed, is where you can sign up for office hours as well. So I'm going to drop that in the chat first. If you signed up via Eventbrite, please note we are moving to Luma. So please follow us on Luma, sign up there. But you can access office hours via the Luma link I just sent. We have actually a really great event this Friday in Denver. It's going to be offline, and it's supporting and talking about women in film. So that's going to be a fun one if you happen to be local to me. And then let me find that intro to angel worksheet. Or actually, if you want the intro to angel worksheet, just send me an email and I'll get back to you, because I think it's a little bit hidden, but I will look for it as we're chatting away. Do we have any folks that have never allocated that are sitting on the sidelines saying, I think I'm ready? Can I ask? Maybe.
I have a question, Natalie.
Yeah.
My dear Natalie, if I had $1 million that it's going to you.
Yeah.
Because you're impressive in pulling together the portfolio of companies together. So for She's Independent, how do you balance your risk in your portfolio? Like, is it all early stage and they're not earning revenue yet, but are they different stages of that?
It's a great question. So if we were professional investors, which technically, I have a professional investment background, but if we were a fund, we would put out some kind of mandate and say, give me $1 million. We're raising $100 million. We have this money under management, and we have to allocate it based on the documentation and the way that we marketed this fund. And it's going to focus on a specific stage, probably a specific industry, or maybe a few industries. We are not a fund. And so what that means is, on a deal by deal, we are determining, do we want to invest? So we really have a range or, flexibility, where sometimes we're saying, you know what, we do want to invest in that company at seed, in that company at Series A, or, it's bridging to a B round. So we have flexibility. I would say, because of what I said earlier, which is invest early and you have that maybe big upside. If you can find really quality looking and interesting looking, early stage, great. But investing when there's some execution or more execution, and, they have some revenues, that's okay too. So I kind of like that approach of, not only can our members you know, people that want to invest with us determine which deal they want to allocate on. But we're looking at different deals where seed plus, meaning not pre-seed, you know, they've already executed, maybe they have some revenues, or I don't know, maybe it's health tech and there are no revenues, but they've done a lot. I like investing where there's already been execution, but it's still early. But again, we're not just investing there. We're also investing sometimes later stage. And I think, you know, the portfolio approach, which is I have $1 million and, you know, I want to invest. You don't want to put it in one thing. You want to make sure that, you know, you're spreading the wealth. You want to make sure that you know, have diversification. If you wanted to just put it in one category, there's nothing wrong with that per se, but you don't want to put it in one business, right? And even a fund, if you're going to, you know, write a big check and be what's called a limited partner, an LP in a fund, so a VC, when you invest in that fund, it's invested in, I don't know, 3, 4, 5, 6, 7 businesses, right? It's not one business when you invest in a fund. So just thinking of that portfolio approach, and also saying, you know, well, how do I feel about this? I'll give you an example. In one of the women's health, or I shouldn't say women's health, in one of the medical businesses that we invested in the other year, one of our members loved the business. And she said, you know what, my father-in-law had this issue and she wrote a bigger check. And she didn't need to, but she said, we've had a personal experience. This is something that really touches me. It's basically ultraviolet light that disinfects catheters. And she was so excited about it. She said, you know what? I'm going to put a bigger check into that. And for her to say, yeah, you know, maybe I don't always write checks this big, but because of my, you know, alignment with mission and, you know, what I've been through and history and the family, like, great, you know, you're able to outsize checks if you want to do that. And I guess one other thing I'll say is, if you want to be more passive, totally fine. You could say, I love, you know, the fact that she's independent, does the diligence, does the research, does the work, and maybe every time they invest, I'm going to write a check for $5,000. Great. It's up to you. And by the way, it's a good example because our minimum check that we'll accept for a first-time investor is $2,500. And beyond that, it's $5,000. But if you really want to invest for $2,500 beyond the first check, we may accept that. But you don't have to be in all the rooms doing the diligence. You can also say, I'm really excited about this and I'm interested in enough, you know, in the high level of what I know. And I know this group is doing, you know, the deeper diligence. I'm just going to write the check. That's okay too. But it's your determination at the end of the day, you know, how you want to allocate.
Another weird question.
Yes.
Was in a different investment VC kind of thing, and someone brought up, is it possible to gift investment to someone else, like to your younger generation? Because there's a lot of older folks who don't need to invest for themselves.
It's such a good question. So what I will say is this, we've dug in a little bit. We are very excited to and open door to take money if people want to sponsor folks to join us that don't have capital for the learning and the access and the mentorship. It's really tough to take capital to allocate on their behalf. If you have, let's say, a grandfather, a family member, or a friend, and they want to gift you money, because I think it's something like, I don't know, $15,000, they can give you a non-taxable gift, and you can invest that, great. But because we are an investment group and we're not a professionally managed fund, you know, there are all these reasons around where the money goes and when we receive it. And it's really tough. DAFs, donor advised funding, and then also there's some of these groups out there that basically say, you can invest, meaning you can donate money, but it's not actually going to be an investment. Like, there's a lot out there that masks or pretends it's investing and it's not necessarily investing. So just know what you're getting into, right? And there's nothing wrong with you saying, I want to write a check because I want to support that business, but that doesn't mean you're going to have ownership. If you're not getting the ownership piece, you may just be writing them a check. They may call you an investor, but are you really an investor without ownership? I mean, you're a funder, you're a capital provider, but you're not really an investor. I don't know. It's a bit of a gray area. Hopefully that wasn't too confusing.
No, and you can't transfer the ownership to someone else either, right? Your equity to
Well,
someone else.
Well, sorry, no, that's actually not okay. I've
I'm sorry,
experienced
just getting too technical.
no, these are really good questions. Divorce, death, right? These topics that aren't so fun to talk about. There is absolutely the ability to transfer, based on a legal contractual agreement and agreed upon terms to say, and I'm going to put this private entity in this other person's name. I don't know the legalities, like I've seen it for divorce and I know about it. I've done it I've been a co-trustee when we lost my mom and there were private investments held that, we wanted to sell to our dad. Like, so I've seen it. I'm not sure how it works for, there's legalities to it. It's tough because there's not always a good, it's called mark to market, but a good market pricing in the private market. And so how do you treat taxes and how, there's a lot that goes into it. But there are transfer mechanisms, of course. There's also the ability, by the way, I should say this, what's called a secondary market, meaning I own a private company position. I may choose to sell it to somebody I don't know through a broker or otherwise, and I may get liquidity. This isn't something that people do all the time, but there are mechanics and there is the capability for it. It's not necessarily super liquid or easy to do, and there's transaction costs, but you absolutely can reassign or reallocate positions when you go through the right channels.
Natalie, quick question. You said there are other next two sessions coming up. Is that planned already or?
Great question. We are going to put them on the Luma calendar very soon. I have an upcoming surgery because of my ski injury. And so I think we're just waiting to see how this works. Timing, we also have our Q2 pitch day. I don't want to wait too long, but I think we also want to make sure that these are insightful and, we're giving you enough support. So yeah, I'd say the next best way to get involved is office hours next week. My surgery is on the 21st, so we may do another installation before then. Otherwise, we may have to wait some time after that. Basically, I'm on some pain meds, which probably impact my teaching style. Not really bad ones, but some pain meds. Can't drive.
Natalie, how do we continue learning a little bit more outside of the office hours and the pitch day? Is the pitch day virtual? So could we attend virtually if we're not in the Denver area?
Great question. So most of our events are virtual. We do some one-off hybrid or in person. And for pitch day, as an example, we've hosted it in New York with a virtual option. We've done it in Colorado with a virtual option. I would say for, most pitch days, we typically do a Colorado option, but virtual is always accessible. They are unfortunately restricted to members. That being said, if you said to me, you know what, I'm really interested, but I'd really like access to see what is this all about. We can give you access to a prior pitch day so you can at least view it, something we've done previously. Or potentially if you say, you know what, I'd really like a teaser. I'd like to, virtually see the thing after the fact or, sit on the sidelines and not ask questions and I'm accredited. We can, set you up as well, potentially, with access to it. I do want to make the distinction that our investment group is very unique in that you don't have to be accredited to be a part of it. Sometimes we have folks that are accredited, but they don't want to start investing immediately and they start as what's called an investment observer. There's no requirements around assets or anything to be an observer. However, an investment observer, because we don't require accreditation, they cannot be on pitches live. That's the only thing that they're not allowed to do live. They get access after the fact because you can't be quote unquote pitched to if you're not an accredited investor based on our definition or our interpretation of, all the regulation that exists. That being said, we can give you access to prior recordings. If you're not yet a member, we can also, give you access if you're thinking about joining but still on the fence. I'm also going to paste one more thing, which is going to be our member experience deck, which just shares a little bit more about kind of who we are and how we operate. But again, I think office hours is probably a great next step as well.
Okay. And so to become a member, I may have missed this, so I'm so sorry
Sure.
if I have. But so in order to be a member, you can either be sponsored or write
You can
a
you can
check.
pay, yeah. So you can join and pay for yourself, or you could, if you again, fall under the, here, I'm gonna drop our membership link in the chat. You can apply for that sponsored investment observer membership, or you can sign up and become a member yourself and pay for it. Also, some employers we're seeing are going to comp or pay for that as kind of learning and development. So that's something else you can think about. The reason we have some sponsorships available is we had a Black woman VC that said, I want to sponsor 20 diverse women to be on their journey. So we're very open to sponsorship dollars there, which is very different than as Uma asked about, hey, can I give somebody money to invest? No, but we will, happily accept what we call sponsorship dollars, and that can, support others that can't, pay to be a member. I will say our member pricing is going to go up in the coming quarters because we do so much. And right now the dollars are just, really low for the amount that we're showing up and supporting folks. So we're really trying to keep this, very accessible, but we also, of course, need to be sustainable.
Got it.
And bear with 1 second, and I'm going to drop in the membership, flyer that shares just a bit more about kind of how we operate and who we are. I just recently upgraded my OS, and so now like my bookmarks and everything are not there. It's killing me. So bear.
Yeah.
You know how that goes. All right. Great questions. I know there's only a few of you left. Where is this? All right. So maybe the member experience, I hate to have you wait for me because I'm having trouble finding it. I might also share that one by email if you want to ping me at natalie@she'sindependent.com or membership@she'sindependent.com. Sorry
Sure.
about that.
No
Yeah.
worries.
It's a lot. The fact that I even put on a little makeup today in my current state of post-injury, it's baby steps, right?
It's tough. It is. Hopefully, you said Natalie at She's Independent.
She'sindependent.com. Yeah. And Uma, am I going to see you on Friday? Love it.
Yes, you're gonna see me. I've asked Cody to attend as well. I'm not sure if she's gonna
Love
attend.
it.
Yeah, and one of my Accenture managing director girlfriend, Catherine Jacobs.
Yes, I do. I do.
Yeah, so she'll be there.
Valued member.
Nice.
Oops, here we go. All right. Well, I guess any more questions? I know we're a little bit over. This was a lot of fun. Thanks for bearing with as I'm working back to being a full human, but very excited. Very excited to be here.
Thanks so much for your time.
Absolutely. Thank you. All right. Hope to see you soon.
Thank you, Natalie.
Bye. Thanks.